All financial advice provided on this show is for entertainment and educational purposes only. The financial ideas and strategies discussed are only provided as a starting point for a conversation about money matters. With regard to your particular investments and financial strategies, consult your financial planner, CPA, or investment professional. All your financial decisions are yours and yours alone to make, and subsequently are solely your responsibility. The information that is supplied through the context of the radio program and any repurposing of its content by the host or network is a combination and collection of solid financial investment understanding, opinion, and comments. This network, show, and its host are not liable for financial strategies, outcomes that you employ in any manner that result in any kind of loss. Shares of corporate sponsors may be the subject of buy or sell recommendations in Jay Taylor's newsletter in accordance with Jay's objective opinion.
Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm speaking to you from the borough of Queens in New York City. It is the 25th day of January, 2023. I do want to thank you for joining me today and at this new forum, Jay Taylor Media, as well as Jay Taylor Media YouTube. Our sponsor for today's show is Klondike Gold, and I'm happy to tell you that Peter Tallman, the president and CEO of the company, is with me right now, and we'll be hearing from him in just a moment or so. Peter is certainly well known to my radio show listeners from the past. We have told the story, but haven't had him on for quite some time now. And it's really good to have him because they had a pretty eventful year last year, and we'll hear about that in a moment. Klondike, of course, is exploring the great Klondike placer, the origin of the placer gold rush that occurred in the late 1800s. Well, some really good things happening. I think it has multi-million ounce potential, and that's why, even though it's an 8-cent stock at the moment in U.S. money, I think it's well worth taking the time to hear what Peter has to tell us. I've titled today's show, "What About the Dollar Milkshake Theory?" Well, there's this notion that as long as there's trouble in the world, the dollar will keep getting stronger because everybody goes to the dollar when there's trouble, right? They have to sell, they have to go out and buy dollars to pay their dollar debts. And when you have tight money conditions and recessions, people have to, the margin clerk calls and they have to pay their debts. So they go out and buy dollars and the dollar gets stronger. Well, there's certainly some validity to that. But there's other people like John Rubino, people that don't agree with that. And John Rubino will join me to talk about the dollar milkshake theory and where he thinks maybe it's not as valid as some other people think it is. So John will be with me a little bit later, but right now I'm really happy to tell you that Peter Tallman, the president and CEO of Klondike Gold, is with me once again. Before I say hello to Peter, I should tell you that the stock trades in Canada under the symbol KG. It trades in the States. You can buy it down here as I have under the symbol KDKGF. 152 million shares outstanding, 8 cents a share, $12 million market cap in U.S. money. Well, I think you might want to pay some attention. Thanks for joining me, Peter.
Jay, it's a pleasure, and I'm glad you invited me on your inaugural, very first podcast. It's a pleasure to be here for this.
Yes, you're my happy guinea pig. Thank you. Thank you for offering to take me up on this. It is we are working on it. I think it's going to be good. This is a first trial run, so undoubtedly we'll make it better as time goes on. Yeah, this year 2022 was quite good. I should say 2022. We're in 2023 now. The first ever mineral resource was calculated, was derived through your hard work on your property, the great Klondike Gold property. Tell us a little bit about what is your resource. Give us some idea of what percentage of your total project, let's say target area has been explored to date.
Well, just to step back, yes. The Klondike gold was discovered in the Klondike in 1896, and 125 years later, in November of 2022, we're the first ever to have any bedrock resource. There's been 20 million ounces of gold picked up on surface from creeks, and until now, nobody's been able to identify any source. And so I'm proud. Our team have done a great job It's been, for me, that was 8 years of work for something that I thought would take much, much less time, to be honest. And, historically, from a historic perspective, it's a long time coming for the Klondike to have any mineral resource. It's crazy because gold has been known, a huge endowment from a global perspective. It's one of the richest gold bearing places on the planet. And, finally we could document that there is gold in the bedrock. And so, yeah, we came out with, we started with a modest amount of gold. It's 580,000 ounces, primarily all indicated mineral resources within an open pit. So all 580,000 ounces are pit constrained, so potentially economic. And beyond that, we have other areas that are directly beside where our pits went that didn't make it into the resource. So we have extra stuff, which I guess you're going to ask me about that in the future anyway. And our property, the geology-wise, it's exactly like California and the California Mother Lode Belt. And our property, we own 600 square kilometers. It's about half of the California Mother Lode district in its entire size. If you think of all the mines that came out of California and divide that by 2, that's the potential we have in our property. Direct potential, same stuff, same kind of gold endowment in California from surface placer mining as in the Klondike. And it's just, to me, kind of crazy. 125 years later, finally somebody's found stuff. So 600,000 ounces, brand new, and we know what we're now looking for. So it's really, really good.
You've sort of learned to know the structural controls, I guess, over this period of time, which allows you to put down the drill more efficiently going forward. And talk to us a little bit, though, about the footprint of this resource, this 600,000 ounce resource you're talking about. Very small area, the percentage of the total target.
And yeah, maybe 2 square miles, I think, encompasses both of our zones. The Lone Star zone and the Standard zone is what we built this resource on. 95% of the gold is contained within the Lone Star zone, which was the first thing we discovered and is absolutely, I've said this on your radio show previously, it's not the best. We knew it, but it was the first, and that's received the bulk of the work. And then the other zone, the Standard zone, we included because we drilled 2 small portions of it to the extent where we could actually produce a mineral resource. And there's, the Standard zone is wide open. In point of fact, we drilled it in 2022. Those results are not reflected in the mineral resource, but we think the Standard zone is bigger and longer than Lone Star. And anyway, everything is wide open. We have an enormous potential just in those zones. We've made another discovery this year at Gay Gulch, which has no mineral resources yet, but we drilled it this year, and we think that something could come out of that. And those are all 2.5 square miles. Those represent the sources for 2 of the 18 really big productive placer creeks in the Klondike that are known historically. And so basically we know that there's a source in every creek, and the faults that control the Standard zone, the Lone Star zone, extend the entire length of our district property, which is 35 miles or more. They're mineralized along their length, and those cut those other creeks. And so we just, there's an enormous amount of work to do. And it's a huge area. We own it all. That's a curse in one way, because we don't have competitors helping us work and find stuff.
Yeah.
But it's an opportunity because well, in my corporate presentations, I give these talks where I compare the Mother Lode to the Klondike. And on the same metrics, we're looking for 50 million ounces of gold near surface, and we've found 500,000 so far. And so there's a lot of upside that exists for us. I'm super excited, if you can tell. It's like, yeah, this is a world-class district that we're discovering.
All right. So what are you planning to do in 2023 to increase that? And how much do you think you can increase your resource? What's your sort of goal, your target in 2023?
Well, a 3-year plan of being able to double and redouble the resource that we currently have. And basically, with the information we have in hand, that the first double is quite easy. We have indications of that already, and so it takes not a great amount of work to do. And most of that will be based on the drilling and surface work we did in 2022, for which assays are about to come in the next month or so. And so when we go to work in 2023, we'll be working on the redouble. And that's the objective here really is to get at least above 1.5 million ounces in total, but really 2 to 4 are as big a number as you can possibly get. But at something north of 2 million ounces, that's where other companies in our immediate area have been taken out by majors, and they've in both cases, those have paid $100 an ounce for every resource ounce in the ground. So I mean, you're going from, currently we're a 12 million US market cap, 15 million Canadian, at 2 million ounces in the ground at $100 an ounce. There's quite a lot of room for improvement from our share price perspective paid in cash. So there's a lot of upside here.
Yeah, there's upside. And as I understand it, basically what you're doing is just really looking at the near surface potential right now, because that's the cheapest, obviously. These orogenic systems, which is what you have, a very, very large one, those things run to great depths. So I guess the strategy, though, for now is to build ounces on surface, and then maybe at some point in the future, let the big boys do the deep stuff. Or what are your thoughts?
Well, that's one of the great leaps forward that we've just done is proven, and we have academics also working. We've got a lot of academic research happening now, but proven that this is an orogenic gold deposit. And then the question is, where are you? Because orogenic gold deposit, it looks different when it's formed at surface than it does at depth. And one question was, if it is orogenic, is it all eroded away? Like, is it only eroded down to the roots? Well, what we know now is that the entire 4 or 5 kilometer vertical is all preserved. There's been no erosion. And so that's why there's gold on surface. We're right at the top where all the gold is in little broad veinlets and zones like that. And so we have those high grade shoots exist, but we have all the depth potential there, as well as 35 kilometers of strike. And yeah, there's just too much. There's great potential. Even when I do presentations to majors now, that's really what I'm saying. It's like, whoever takes this project on and mines it systematically rather than exploring it, what we're doing, it's a 50-year project. It's suitable for a major. It's accretable to a major, and it's just a huge potential and a world-class endowment. We're proving that there's actually something substantive here.
When you and I spoke recently, I think last year sometime, you might have talked about the possibility of some early production. Is that still something that you're looking to do, or is that off the table for now?
We went ahead and tried to permit it. We have a permit to mine and process, but that permit lacks the ability to crush. And we did test work this year trying to basically do some cheap, fast, quick revenue. And what we realized was that we needed to crush the rocks. And our permit, that's something that we lack. We permitted it as if it was a placer mine. And it doesn't work as a placer mine, trying to mine stuff from surface. So that's it was kind of Mickey Mouse in a way, but we do still have the permit itself allows us to construct mine haul roads and all the infrastructure we need. It's useful, which is kind of why I really did it. But quick mining, no, probably not. Although we'll still keep looking at it, and we're going to apply for a crushing permit as well.
You know, I've been around this business long enough to know that very few junior exploration companies are not sorry when they tried to build a mine. Most of them have, I think.
Yeah,
It's
no,
difficult.
I've seen it as well. I agree with it. It's something that I was not really emphasizing because, yeah, too many companies get in a world of hurt for doing things like that.
Yeah. Different skill set, and stick to your knitting, and you're an exploration geologist. So that's probably where you'll provide the best value to your shareholders. If you can prove up a couple of 3, 4, 5 million ounces of gold, Peter, I think your shareholders who buy at 8 cents are going to be very pleased. What might they be looking for that could lift them off of 8 cents up to, you know, a quarter or 50 cents or something like that this year, possibly? What drivers might there be?
Right away. So that right now, or over the next month or so, we're going to receive the results from 2022 because we don't have them yet. And for one, the first thing we found at Gay Gulch, it's a new zone. It's not part of our mineral resource inventory. Some visibly, you know, some beautiful, it's a fault breccia vein full of gold. And as a result of that, that also changed. It helps with the orogenic model, but it also changed our exploration targeting. So we drilled Gay Gulch. And so those, first the surface work and then the drill holes there, and they were visually appealing. And then we drilled the Standard Zone. So from our 2 resource areas, the Lone Star Zone, as I said, was 95% of the resource, but it's half the grade of the Standard Zone. And we have 2 little tiny pits only in that. And we drilled, there's a half a kilometer gap between the pits. So we drilled it, we've drilled around it and along it. And that's where the bulk of the expansion to the mineral resource will come from. And those holes visually look appealing as well. So I'm comfortable thinking that we're going to get some, you know, reasonable results out of all of that. Taken together, though, that puts us a long way towards doubling our resource right off the bat. So if we have holes that hit every time we hit from now on, basically it adds ounces to our resource, and that's accretive directly. It's not exploration so much anymore. It's a game of adding ounces to a number.
Yeah, shallow drill holes. So how much drilling do you expect to do in 2023, and how well funded are you to carry that out?
We are raising money now, and we will continue to raise, as I typically do, that raise money for the year in between January and March. Last year, well, typically we're drilling 5 to 7 to 8,000 meters per year in between 50 and 80 drill holes. I just calculated it, interesting enough, our average for the 50,000 meters of drilling we've done to date, it averages to be 50 vertical meters, so like 170 feet deep is the average vertical depth of everything, of every single hole we've drilled. So all the gold is sitting at surface. That's great. Orogenic gold systems go to kilometers deep, miles deep, same thing. And yeah, no, we have lots of potential in that direction. But the effort has been, going back to that first thing, it's to prove to the world, after 125 years, there actually is gold in the bedrock here, and the endowment is huge. So we've done that, and now we can start pegging off all these zones and establishing resources for our shareholders.
Very good. Well, I guess we'll keep our eyes open for the news that's coming out for last year's drill results. This year's action, you'll get into you'll start your program this year. I don't know, what's somewhere around May?
Yeah, May.
And you can go how late?
November. We've been able to start in March, and 1 year, but again, depends on the snow. And this year it's been anyway, it'll be May this year.
May or June. Okay, great. Well, this is I think a great story. You know, if you like to buy high and sell low, well, you're not interested in this one, but I think if you like to buy low, sell high. I think the prospects are very good for doing that, I believe. So I've stuck with it, Peter, in my newsletter. I think I look back at 2015 when I first added you to my letter, and here we are. It's been, as you say, longer than you had hoped and you had expected, but that's life. But it looks like payday could be maybe not that far away right now. So I want to thank you very much for spending the time to update us on this story. It's great. One more thing. If you're raising money, is it open to accredited investors, or are you doing it
Yep.
through the, yeah? And if people are interested, they should just contact your office, I suppose.
Yep. Email me or info@klondikegoldcorp.com. It is open to accredited investors. Yeah.
Okay, excellent. All right. Well, thank you very much, Peter. We'll certainly be keeping up with your story going forward this year. It's great to have you again. All right, folks.
Thanks very much, Jay. Thanks and best wishes with your podcast.
Oh, I think it's going to be good. Thank you very much, Peter. Well, folks, we're going to go to John Rubino now. So John has some ideas on the dollar milkshake theory. So we'll be right back with John Rubino. All right. Now, I think we're well within the time, I think. So, all right. I'm going to end this, Peter. And unless you hear from me, it'll be good. And then we'll let you see it as soon as we can.
Yep. Perfect. Thanks, Jay.
Okay,
Well done.
Thanks for doing a double.
No sweat. Take care.
Yeah. Bye. Welcome back to Turning Hard Times into Good Times. I'm really pleased to tell you that John Rubino is with me, and we're going to talk to John about the dollar milkshake theory. Is it something that has any validity? We've had people on our show. Well, Keith Weiner for one. Brent Johnson is the one that gets credited for naming the dollar milkshake theory. It holds that as long as there's trouble in the world, the dollar gets stronger, not weaker. And that's because the rest of the world owes so many dollars. And when times get tough in the financial markets, they have to go out and buy dollars, and it bids the price of the dollars up. And there's certainly some validity to that as long as the existing system stays in place. But John might have some different ideas about that. And John, I'm so glad that you could join me today. Thanks.
Hey Jay, it's good to be back, and congratulations on the new video venture. I predict success.
Well, thank you. I think it should be good. I know that everybody's going video these days, and if you video, you can also listen to it when you're jogging or whatever. So really glad to have you. Before we get into the subject that I just mentioned, I'd like you to tell our viewers and our listeners about your Substack program. You are signed on to Substack. I understand you have quite a few followers already, subscribers, I should say. What do you hope to do there, and how can people avail themselves to that, to your insights that will be provided in written form there?
Yeah, well, Substack is a platform where writers can set up online newsletters, and then the platform handles all the details, and you just write. So it's like the culmination of technological progress from the point of view of a writer. We don't have to do anything except put our thoughts down, and then there are different ways to view it. You can get a free subscription, which gives you some of what's published, but not all, and then various kinds of paid subscriptions that let you access everything. So it's brand new. I started this on the 3rd of January, so it's a little over 2 weeks old. And yeah, so far so good. The response has been pretty positive. I'm publishing a lot of stuff now, so there's some content to check out. So yeah, it's rubino.substack.com, and you can go just check it out, no charge. Sign up for free and see what you think.
Yeah, good. Well, I'm glad to say that I've signed up for a subscription. I'm looking forward to keeping up with all you're doing, John. And again, thank you for joining us here on this podcast. Okay, so the dollar milkshake theory. I guess it's Brent Johnson is the one that named it. The idea seems to hold some validity. I know that you understand it. It suggests that, whenever there's financial problems in the world, people have to pay their debts, and so they go out and buy dollars, and it bids the price of the dollar up, with the dollar being the senior currency, the world's reserve currency. And so at least the countries that are tied to the dollar, and that until recently has been almost everybody, although China and Russia and some of the adversarial countries are trying to pull themselves away. But nonetheless, it's still the world's reserve currency is the dollar. What do you think about the validity of that argument that forever and a day we're going to have the dollar?
Well, I think it's kind of funny in a messed up way that the world is in such bad shape that whenever there's trouble anywhere, money tends to flow into the US because we're perceived to be the least messed up place in the world. And this is true even when we cause the trouble. Like the US goes and starts a war somewhere, does some kind of crazy thing with the international banking system or whatever. Money still flows into the US because even if it's us causing the trouble, it's still trouble. And it's still like, for instance, if you're in China, let's say, and any sign of trouble in the world leads you to move money into a Seattle condo or something in Vancouver or whatever. You want to come to North America, basically. And that has a way of bidding up the dollar, that increases demand for dollars. And plus, as you said, so much dollar denominated debt is out there that is a kind of a steady state source of demand for dollars. You've got to get dollars in order to pay off your dollar denominated debt, and that makes the dollar go up. Now, having said all that, yeah, that makes the dollar stronger versus the yen or the euro or pound sterling, but it does not make it an actual strong currency, because the way you measure the true strength of a currency is its purchasing power. In other words, can it buy the same amount of stuff this year as last year? And with the dollar and with basically all the other fiat currencies, the answer is a resounding no. The dollar lost 10% of its purchasing power in 2022, which is the sign of a collapsing currency, not a strong currency. So depending on the lens you use to view the world of currencies and foreign exchange, the dollar is either strong because it's being compared to the euro and the yen, or it's weak because it's being compared to the real stuff that you can buy with it. And I would say the latter definition is the right one. A currency is only what you can buy with it. And all of the world's fiat currencies are entering an inflationary phase where we build up way too much debt. Massive amounts of new currency have to be created in order to manage that debt, to keep it from going bust. That lowers the value of the currencies going forward, in terms of the real stuff that you buy with it. So that's the world we're living in now. The major fiat currencies, well, fiat currency in general is a flawed concept. That was always going to fail. And the major fiat currencies are just in the process of that now. Inflation, that is the decline in purchasing power, may moderate a little bit this year. But longer term, there's no doubt we have no choice but to inflate away our currencies in order to stave off a massive deflationary crash. So, the idea of any of these currencies, with the possible exception of the Swiss franc and the Russian ruble, being strong going forward, that's a pipe dream. The euro, the yen, pound sterling, most of the other fiat currencies of the world are all headed for history's trash heap. And it's just a question of which gets there first.
Why the ruble and the Swiss franc? Why might they be the exceptions?
Well, Switzerland is a banking center that has historically attracted so much capital. It's like the US in microcosm, where if there's any trouble, money flows into Switzerland because people want to hide their money in Swiss banks, and that props up the Swiss franc. And Russia, almost alone in the world, has not taken on a lot of debt. They've managed their government debt very well. They've been buying lots of gold in relation to the size of their economy, and they've got massive oil reserves, among other things. So that's a currency that has various things propping it up. And now, of course, if NATO comes in and destroys Russia, that's a different story. But barring the war that ends Russia as a political entity, the Russian ruble has some things going for it. And so, there's no guarantee with it either. But right now, it's not making the same mistakes that the US and Europe and Japan and, just about all the other big countries are making. So that's why I threw the ruble in there. I wouldn't, because of geopolitics, I wouldn't say it's a great bet just because we're actively trying to destroy Russia right now. But barring that, let's say we settle the Ukraine war and we get back to shipping lots of Russian oil into the world and natural gas into Europe. Say that happens, the ruble is probably a pretty good looking currency.
Yeah, it's interesting. You said the fiat currency system is flawed. I think it's Alistair McLeod that said it, maybe even JP Morgan said it first, and that is that the only real money is gold, because everything else is everything else is debt. And we have a debt-based system that's getting us into a lot of trouble. So here's the question for you, John. Generally speaking, the Federal Reserve is holding tight. It's involved in the QT. It's taking money out of the system too, and it's allowing interest rates to rise. The idea is that Jay Powell will stick with the current policy till we get to 5.5% on the Fed funds rate. And my friends that are believers in the dollar milkshake theory say, well, this can only strengthen the dollar, because the dollar, because of the things we just talked about. There's going to be a lot of zombie companies, and there's going to be a lot of companies that are going to be forced to pay their debt. But on the other hand, and there's going to be, of course, I would think also a lot of companies, zombie companies, that aren't going to be able to pay their debt or roll their debt over at higher interest rates and so forth. But what do you think about this idea that, well, things could just keep going on forever the way they are? Because what happens when interest rates keep rising? Are we going to have a lot of trouble? What about the federal, what about, I think you talked about something recently, the debt spiral could be a threat, so that even if we remain in what would be considered a deflationary tight monetary system, it could lead to some real trouble that might actually turn out to be dollar unfriendly.
Well, we don't have to raise interest rates from here. They're already high enough to blow up the global financial system. And they do that. Well, they do that in lots of different ways, but one very obvious way is that it raises the interest cost of everybody who has a lot of debt. Because when you roll your debt over, it has to be at a much higher rate now, which raises the cost of carry for that debt.
Mm-hmm.
And that's happening to countries and individuals and companies all over the world. So everybody's interest costs are soaring. And in the case of a government, for instance, the US, if we have to end up rolling over our debt at today's interest rates, let's say the average rate on treasury paper goes up to 4 and change. Well, that puts us almost at $1 trillion a year in just interest costs for the US, which we have to borrow. So that increased borrowing raises our interest costs going forward, because we have to borrow at these higher rates too. So if rates stay the same, our interest costs rise to debilitating levels. I mean, we already have to take care of the baby boomers now that our generation is retiring. Right. And that means government spending and government borrowing, we're going to soar in any event. So add massively increased interest costs to that, and you do get kind of a death spiral where we're creating so many new dollars to cover all this new debt that puts downward pressure on the dollar, which forces interest rates up even higher. And you get this spiral where the positive feedback loop increases everybody's costs, decreases the value of everybody's currency, until they all just spiral into the abyss. And I would argue that we're pretty close to that now, because interest rates have already reached a level where that will happen. And if it starts to blow up a lot of financial entities out there, the governments of the world are going to have to respond with easier money. So maybe they try to push interest rates down, but they also do that by creating massive amounts of new currency. So we get the death spiral no matter what.
Yeah.
And I don't see any solution to this. There are timing issues. How long will it take?
Yeah.
But we're on a course that we can't get off of now. I mean, we could raise interest rates to the point where we cause a deflationary depression, but I don't think too many people in charge right now want to be the Herbert Hoover of this generation. You know, the guy we remember 100 years later because he blew up the global financial system. So they will choose inflation over deflationary depression every time, which means that we're on that part of the death spiral track where we're going to eventually try to force interest rates back down, but we're going to do that by creating insane amounts of new currency, and we'll pay that price for it. We'll enter a new inflationary stage that we can't get out of no matter what. Yeah. That's a not too distant in the future story, I think. I think a lot of the stuff that we're talking about happens in 2023. And then, or at least a lot of the decisions happen in 2023, and then a lot of the consequences happen not long after that.
Well, let's say there's something that takes place, something's broken, and you have a financial system that's starting to break down, looking like 2008, and they start to print huge amounts of money. Again, that money is created from debt. There's no asset behind it. It's not gold, it's not silver, it's not copper, it's just promises to pay. It's debt. And so it feeds on itself, doesn't it, John? If that happens. Let's say that, Powell gives up and he says, "Oh, we just can't do this anymore. We got to start to just let her rip and pump huge amounts of money out in the system." And if that happens, then the debt just grows exponentially, right? And then
Yeah.
it's
Well, because let's examine what your logical reaction to something like that would be if it happened. If the Fed comes out and says, "Listen, we can't keep interest rates at this level ever again. We're going to have to push them back down and keep them down because this is blowing up and this is blowing up, and we have to address these implosions." So if you're a company or a government or an individual, you say, "Oh, they're going to inflate the currency away at an accelerating rate. Let me borrow as much as possible right now," which is why you can't inflate your way out of debt, because the process of inflating your way out of debt incents everybody in the system to borrow more. So debt actually soars while you're trying to inflate it away. And that's where we are. We have a choice of a deflationary depression or this other thing we're talking about, where which I guess we could call the crack-up boom from the Austrian School of Economics.
right.
The point at which a critical mass of people conclude that it's the government's official policy to inflate away the currency, and they act accordingly. So we get panic buying of everything in sight with borrowed money until the whole system just comes to an end. And we're going to live through that, I think, in the not too distant future. So
I hate to hear that, John, but I'm afraid you're right. But the masses of people are not prepared for that. And of course, Wall Street wants people to think positively, to keep buying their products and so forth. So there's no incentive to tell the truth. The politicians also, nobody really wants to hear the bad news, right? So we just keep pretending that things are going to be all right. One of the things I've noticed, the differences I've concluded between, say, the Alistair McLeods of this world that see a dollar's days numbered, and a Mr. Weiner or Brent Johnson, Dollar Milkshake people who think the dollar is destined to remain strong. Recently, I had a guest that said another at least 5 or 10 years the dollar hegemony will continue on, and maybe he's right, but it's hard for me to see that. But in any event, one of the differences, it seems to me, between the people of that thought and the people like yourself and Alistair McLeod and I suppose James Turk and Peter Schiff, a whole bunch of people that are on the inflation side, is that that the Dollar Milkshake people tend not to think about geopolitical issues, geopolitical events that are taking shape. And of course, that's one thing that Alistair talks about frequently on my show. He talks about what Russia and China are doing now to get away from the dollar, and we sort of forced the issue on Russia when we sanctioned them and wouldn't allow them to use the dollar system anymore to make payments, or to receive money. You have any thoughts about geopolitically what might go on, what might also disturb the dollar and create some real havoc here?
Well, this is an example of what morons we have running the U.S. financial system, because we have the world's reserve currency, which is this amazing gift the rest of the world gave us. It's an incredible power to have, to be able to create unlimited amounts of money out of thin air. It makes life as a politician pretty easy. But these morons have decided to use the power that comes with the world's reserve currency as a weapon. So anybody who steps out of line from the official policy of the U.S. empire gets threatened with expulsion from the SWIFT international bank clearing system, or their foreign exchange reserves get confiscated, or their companies get banned from business in various places. We're using the dollar as a weapon. So it should come as no surprise that a lot of the rest of the world wants to find a way to bypass that weapon, to avoid, being the subject of U.S. anger financially. And so a lot of other countries are cutting bilateral trade deals where they trade with each other in their own currencies, or, Russia and China are apparently setting up a gold-backed stable coin. And they're working with Saudi Arabia now for oil to be traded in currencies other than the dollar. So the petrodollar might be living in the twilight of its life right now. And it's all our fault. We could have kept the dollar and the global financial system as this neutral thing that everybody could trust because it didn't have an agenda. But instead, we used it as a weapon. So we're kind of getting what we deserve here. But I think it's going to be, a very ugly process. And through it all, the dollar might remain the most important currency for foreign trade. People will still use the dollar, but I think at the end of the day, which is to say a few years from now, it won't be the dollar as we know it today, because we're going to have to go back, not because the dollar's dropping versus the euro and the yen, but because it's losing purchasing power at an accelerating rate. We're going to have to go back to some kind of a commodity-based currency. Say we go back to the gold standard, and we just define the dollar as 1/10,000th of an ounce of gold. We could be forced to do that by the marketplace at some point soon. So we'll still be using dollars. Dollars will still be a very important currency in world trade, but it won't be a fiat currency that the government can just create out of thin air. It'll be backed by gold and limited by the amount of gold that we have. And that's a very different monetary system. So, the dollar and maybe the euro and maybe the yen will still be around, but they'll exist in a different way on different terms. And I think much better terms if we go back to some kind of a gold standard. That's a sustainable system, whereas this is emphatically not a sustainable system.
Well, certainly as the dollar loses its value, people that are holding dollars for any length of time will want to try to protect that purchasing power, and they'll do that by buying gold or something that's real. Silver, if it's not in liquid form, they don't have to have it immediately. They can buy longer term assets. But it seems to me that that's what the Chinese and the Russians and the Saudis and the Gulf states that are producing oil are now sort of working together, because Saudi Arabia can sell its oil to China for yuan, and then and there's a futures market, by the way, in Shanghai for oil. They can sell their oil for yuan and immediately turn their yuan into gold, because there's a gold trading in, as I understand it, in Shanghai as well. So that would be the natural thing. I mean, so it's people like yourself and me and a lot of gold bugs have been doing for years. We've seen the handwriting on the wall, and we're saying we want to protect our purchasing power. We want to own real money, not fake money, not fiat money. And so it seems like that's just a natural evolution. It could be, but you're also suggesting stable coin or some sort of cryptocurrency that's connected to it as well. Is that right, John?
Well, I'm suggesting competition. Lots of things are going to bubble up that bypass the dollar. And Saudi Arabia selling oil to China and immediately converting the yuan that it gets into gold is wise for Saudi Arabia. Gold is a much better reserve asset than any currency because it's not losing value. So if you need dollars for trade, then you have to hold them in reserve. But to the extent that you don't need them anymore, you can hold a lot less of them. So there's maybe $15 trillion sloshing around out there in the world that could come back to the U.S. and be used to buy U.S.-based assets, which would be incredibly inflationary here. So that's another thing that's out there looming. And what happens at what time and in what order is impossible to predict. But all of this stuff is kind of somewhere or other in our future. And some of it's happening right now. Some of it's going to happen on a much bigger scale in the future. And we can't know really any of that with the timing and everything. But all of this stuff is heading our way. And it's all kind of baked into the cake. It's going to happen. There are going to be currency crises, and probably some geopolitics to go along with it. And fiat currencies are going to be in much worse shape 5 years from now than they are today. Gold will probably be much higher. We don't know who's going to be the big buyer, although I think central banks are going to be among the big buyers of gold and silver. But all of that is on its way. So as an individual, what do we do about that? Well, we try to emulate what the central banks are doing right now. We should be buying gold and silver ourselves, and maybe, as you said, longer term assets like the really high quality miners who have gold and silver in the ground. Those things will probably do well in the kind of environment that we're talking about. Cryptos, I'm unqualified to express an expert opinion on those, but it's completely possible that Bitcoin is in that mix and becomes an important part of the monetary system at some point.
Yeah.
Lots of other things like that, like energy assets. I mean, anybody who bought Exxon stock over the last couple of years is pretty happy they did, because energy has become a bigger part of the stock market's mix of favored companies. And I think uranium is very interesting going forward because of specific changes in the energy market. There are going to be a lot more nuclear plants coming online in the near future, and that's going to lead to more demand for uranium, which means the miners who have it in the ground now will do better. It's the same story for them as it is for gold and silver. Different drivers, but same dynamic. So there's a lot of stuff you can buy right now to protect yourself against what's coming. And it's completely possible that for a lot of people, let's say the next 5 years, is the most profitable part of their investing lives, because they got into real assets at the right time and on the right terms, and rode them through the main part of the bull market that's definitely coming. So I think that you can feel very pessimistic looking at the world in one sense, but very optimistic in another sense, because there are some opportunities out there. We could make life-changing money by doing this right. And I think that's the real intellectual challenge. We can't fix American foreign policy or things like that, but we can totally fix our own finances. And there are opportunities that we should be looking at. Your newsletter contains at least 5 10-bagger junior mining stocks right now.
I believe so. Yes.
Yeah. And I don't know which ones they are, but I hope you'll tell me.
All right. We'll certainly will, John. We'll keep you up to date on that. I think our time has run out. I want to thank you so much for sharing it with us. Folks, that's it for this week. Until next week. And I don't know yet who my guests will be, but you keep watch your inbox and your email inbox, and you will learn very shortly who our guests will be next week. Until then, goodbye and God's blessings to you.